Hey friends, Brandon Cass here, financial advisor. And today I want to talk about some potential ways to invest during times of inflation. So after 17 years of helping clients grow and protect their assets, I am convinced the best strategy is to have a well-balanced portfolio with lots of different kinds of assets moving at one time. Now there are certain economic phenomenons that come along and take place, like inflation, where some assets tend to perform better than others. And so we recently just got some pretty heavy inflation data. The CPI, or the Consumer Price Index, just rose at its fastest rate since 1990. So we just had the largest increase in inflation data in 30 years. So while it's important to maintain a good long-term strategy that's goals-based to the client, some of these environments do provide opportunities where some assets perform better than others. So let's talk about some of these. Number one, stocks. So the thing about stocks, corporations, they have the ability to raise their prices, as prices increase. So they just put that onto the consumer, like you and I, to maintain their earnings and maintain their dividends, which are important for investors. So stocks are one way potentially to keep up with inflation. Secondly, TIPS. TIPS are Treasury inflation protected securities. So TIPS carry the same type of investment risk as a traditional bond or fixed income. The thing about TIPS though is as inflation rises, there's a principal adjustment that's made to the investment to keep up with the inflation. So while a traditional bond works like a teeter-totter, where when interest rates rise, the price of a government bond goes down, TIPS work differently, where when interest rates are rising, there's a principal adjustment made to actually keep up with that inflation. So TIPS are another way to potentially hedge during inflationary times. Thirdly, REITs, or real estate investment trusts. So one thing about real estate, as inflation rises, sometimes the price of properties continues to rise, but for landlords and property owners, they also can put that cost back on to their tenants, which is no good for the tenant, but as a means of investment return, and for those property owners, they just raise their rents to keep up with that inflation. So real estate investment trusts are another way to potentially hedge against inflation. Lastly, commodities, so things like gold and silver and steel. So let's talk about steel for a second. So steel is used to, for infrastructure and to construct buildings and appliances and cars, furniture, you name it. As inflation rises, the price of steel goes higher, and so those producers charge more to the end user, where there's lots of profits for those steel companies. So steel just being one example of a commodity that potentially does well during times of inflation. So while we don't know if this inflationary environment is going to last a long period of time, hoping that the supply chain issues get worked out, it is meaningful to potentially make tweaks along the way to provide some of these hedges during these phenomenons like inflation during various economic cycles. So see you next time, and we'll keep on trekking with the good goals-based strategies.